On the 6th of April, the new tax year began for 2022 to 23, and with that, all of our allowances reset for this year. In this video, I'm going to take you through my ISA plans for this year, how they all look, and why I'm doing this, just so that you can get a feel for how your ISA setup might look. Let's go.
I work hard each and every day. I get lost in the words I say. I don't push pause, no I push play. I won't stop till I make a change.
Hey everyone, it's Lewis back again with another video, and today I'm going to show you how investing is done tax-free ISA style.
We're gonna be rich!
So firstly, I have both a stocks and shares ISA and a lifetime ISA I opened with Trading 212 and Moneybox respectively. Why these two ISA types with these two providers? Well, this is why. Trading 212 offers a very low cost stocks and shares ISA and easily has one of the most impressive offerings of ETFs, ETCs and individual stocks in the UK. At the time of recording, they host an amazing 8,247 stocks and way over 1,000 ETFs and ETCs across 9 different countries, including the UK, the USA, Germany, and France. Anything you can think of and more are on there. And with Moneybox, I've mentioned them positively before, but they have a fantastic app full of learning tools and trackers to ensure that your investing or saving journey can be made much easier, and you can see just how much you'll need to retire comfortably, or at least within your current lifestyle. Not only that, but you can see how much of a mortgage you'll be approved for, track just how much of your lifetime ISA bonus that you have left to claim for the year, and so much more. Right, so on to the good stuff. My stocks and shares ISA with Trading 212. So with my investment plan, I don't intend on doing anything difficult or stupid. I'm not going to YOLO all of my money into GameStop or AMC stocks.
To the moon!
But at the same time, I'm not going to play it safe and throw all of my money into a gold ETC or bonds. That's because, well, both of these ideas are, in my opinion, stupid. With investing, you need to understand your risk tolerance first. And for me, I love stocks. I absolutely love them. And they are what is going to grow my money and outpace inflation even at the 30-year highs that we see today. This investing is what will see me through the current cost of living crisis and way beyond that. Because I'm not in it for just a year or two. This is like the rest of my life type of stuff. So with that being said, here's my ISA setup for this year and what I'll be investing in. Yes, I called it the Millie Maker. Yes, I put £100 into it on the 6th of April. And yes, ever since, the stock market has been slightly down.
Investment stuff.
But I don't care about that. Like I said, I'm not in this for 1 week or 1 year. I'm talking tens of years. This is for my retirement. That's what investing is or should be. Anyway, I've put my money into a couple of different ETFs and ETCs, which, by the way, are exchange-traded funds and exchange-traded commodities. I'll do a deep dive video on those very, very soon. But this allows me to spread my risk around, diversify my portfolio across literally the entire world, keep an inflation-proof asset such as gold, and also ensure that I invest some of my money into what I think is the future of living, which is clean energy.
I'm going to save the planet Earth.
So my biggest holding you see here is my favorite, the US stock market. This is a market that I know very, very well. And it's the benchmark for all other stock markets across the world because of how well the US market does every single year. I'll be investing my money into the most popular stock market index within the US, which is the S&P 500. This is called the Standard & Poor's 500. It's the 500 biggest companies in America by market cap. So in here, you'll see the likes of Apple, Microsoft, Google, Amazon, Tesla, all of those amazing companies. Ever since the S&P 500's inception in the 1950s, the average annual return of this index is 10.5%. And actually over the last 10 years, the S&P 500's average annual return has been 14.84%. So basically, I know that if I park the majority of my investing money here for the next 30 to 40 years plus, I should be doing very well. And if not, I'll have much bigger problems on my hands in how big my portfolio is doing or how it's not doing. Because if the 500 biggest companies in America went bust, Don't be surprised to see fireballs falling out of the sky, as it would be the end of the world. Anyway, I hold my S&P 500 investment in Vanguard's S&P 500 ETF, which is stock ticker VUSA. You can find all of the information to all of the ETFs in this video in the links down below in the description for your own research. Now, the second biggest holding in my portfolio is Vanguard's VWRL ETF, which is their all-world fund. This does exactly what it says on the tin. You're investing in the entire world. Now, yes, the majority of this fund is again in the US market, but that's not why I invest in this one. It's so I can get exposure to other very well-performing markets such as the UK, obviously here, China, France, and Germany. This ensures that I diversify my investment so that I don't have all of my eggs in one basket. Because as much as I love the US, it's not a guarantee that the S&P 500 will provide green returns every single year, especially if for whatever reason the US economy doesn't do very well, for example. So I can mitigate that risk by putting some of my money into the rest of the world. So whilst the US might not do well one year, China might do very well. Or let's say the UK is down, but Germany is booming. This is what I like to call balancing the scales. I don't want to be weighed down by putting everything on this side. So if I put something as well on this side, I can be
perfectly balanced, as all things should be.
And this will more than likely make my portfolio a lot better off in the long run. And with this strategy, I'll probably beat a lot of other investors out there who are way too busy chasing quick gains with meme stocks or just China alone. So next up is the Global Clean Energy ETF with iShares, which is BlackRock's ETF and index fund subsidiary. Now, I believe that clean energy is the future of all things, well, energy. In my opinion, the life cycle of the fossil fuel is almost over. It's a finite resource that does more harm than good. And for me, renewable, more clean energies such as electricity, hydrogen, water, and wind are way more sustainable and much more cheaper for the average consumer. There are some great companies within this ETF, and no, funnily enough, Tesla actually isn't one of them. But you will find companies such as Siemens Electric, Plug Power, and Enphase Energy. Basically, all of the companies here are focused on providing a cleaner, more sustainable future for all of us. And it will do me a world of good to have a portion of my investments into how the world will look tomorrow, as well as the biggest companies of today. Plus, in 2020, this ETF returned an insane 141%. Now, of course, that kind of return isn't sustainable for the long term. It simply isn't. But it's clear that people realize that this is the future and are placing their money into this. In 2021, it was down 23.8%, so clearly people decided to take their profits from 2020 off of the table. But I think that because of this, now is a good time to buy in. And I can only imagine how this portion of my portfolio will look in 20 plus years' time.
Buy low, sell high.
And then last but not least is an investment in gold via iShares' physical gold ETC.
I love gold!
So unlike most ETFs, this one actually pegs its price to the price of gold itself, not just gold mining companies or other such things. So basically ETFs are funds of stocks. Even if you want to get a gold ETF, you'll only be holding your money into the stocks of companies that produce gold or mine gold. But with ETCs, exchange traded commodities, you're actually investing into the price of the actual commodity itself. In this case, it's gold. You can do the same for oil, for wood, for platinum, for anything. More specifically, this ETC literally tracks the price of gold bullion that is stored in a London vault. Fun fact of the day for you. So why am I investing some of my money here? Well, gold is a great hedge against inflation. That's because the price of gold relatively stays flat, and because of this is considered a great store of value. It's worth way more than what our paper money is worth. It's not necessarily going to grow your money 10 to 15% like each year like stocks can possibly do, but it is much less volatile. And in times of great inflation like today, the money that you put into it will at least keep its pace with that inflation. Another reason to keep some money in gold, again, for me, is that the price of commodities like this tend to go up when stocks go down. Kind of like a supply and demand kind of deal, you know what I mean? So again, it's all about balancing those scales. But because gold isn't an amazing money grower, I have only dedicated 10% of my portfolio to it. But as you can already see from my initial investment and an updated screenshot of it from today, it's beating the stock holdings that I have because stocks have been down over the past week. So there we have it. There is my stocks and shares ISA investing plan for this year. Basically, what I plan to do is invest a good portion of my income into this pie each and every month I get paid and leave it well alone. Now, I have the option to rebalance my portfolio at the touch of a button with Trading 212. So if one of my ETFs goes a little crazy and starts to outgrow its percentage, for instance, if I get something like the 141% that the clean energy ETF gave us in 2020, I can take some of that profit off of the table and put it back into some of the lesser performing ETFs that I have in order to average my cost in at a lower price of those ones. And hopefully, over the long term, that will give me a much bigger gain. By the way, if you want to invest with Trading 212 and have a look at my portfolio in a lot more detail, I put a link down below in the description that will give you a free share if you sign up as a new member and fund your account from as little as £1. That's surely worth a like on this video, right? Also, while you're at it, subscribe to the channel if you already haven't for more money-related content such as this. Right, so onto my lifetime ISA with Moneybox. So I've spoken a little bit about this one in my ultimate guide to ISAs video, which is right up here if you haven't already watched it, and I highly recommend that you do so as that breaks down every single ISA type in the UK. So if you're looking for somewhere to start with this sort of stuff, go right over there. But essentially, this one is for buying my first ever home, which I want to be able to do within the next 5 to 10 years. Now, my lifetime ISA is in a cash ISA. Why is that? Why isn't it in stocks and shares, Lewis? Because you love them so much? Well, because it's less risky. Simply put, I'm saving for a home here. I'm not investing. As much as I love the stock market, I don't want to take the risk of possibly the stock market crashing within the next 5 to 10 years, as no one knows when that will happen, not if. And of course, I don't really want all of my money that I've put into it going right the hell down, especially if I get to the point of being able to buy a home and having to wait for that money to go back up again, which could take a good part of a year. So there is that. And plus, of course, the government pay a 25% bonus of whatever money you put into a lifetime ISA. So for me, I'm getting a pretty damn low risk 25% return on my money every single year I put into this one. The most that you can pay into a lifetime ISA is £4,000 every tax year. So if you're able to max this out, you get £1,000 for free from the government, which is insane. Now, I was able to do this last year, as can be seen in the screenshot. The remainder of the £1,000 bonus is still pending. And I plan to basically do this every single year for the next however many years that I'll need so I can have a good amount to put down on a house. I want to get this to about 20 to 30k, I think, and that should be very achievable, I think. So my girlfriend also has one as well, so we can both put money into these and hopefully we will be homeowners sooner rather than later. So that's why I put my money into a cash ISA with lifetime ISAs, not a stocks and shares one. You can do this, but for me, I'd rather do that if I was using my lifetime ISA for retirement instead of buying my first home. Just a quick one, by the way, if you're already a homeowner, you cannot open a lifetime ISA to buy another home. You can only use one for retirement, and you must be between the ages of 18 to 39 to open one. But look, I explain all of that and much more in my ultimate guide to ISAs video, so please do watch that. So there we have it, my ISA investing plan for the next year and beyond, hopefully. I really hope that you found some value in this video, as always. If so, do give it a thumbs up and let's have a discussion about it in the comments down below. If you haven't already, please do consider subscribing to the channel for more money-related content. Follow me on Instagram for more posts, and remember, until next time, every quid counts. See you soon.